Let's talk stocks. Diane King Hall is with me from New York this morning. As I speak, Apple is trying to firm up, Diane, to 245. We were at 241.5 earlier this morning after a sell note. This is rare stuff. I was surprised to hear this, so let's talk about it. It comes from MoffettNathanson.
Yeah, their view on Apple now is they've downgraded it to sell. Their new price target that they see Apple headed toward is $188 a share. So that is certainly creating some headwinds around Apple. And it goes to counter to some of the bullish commentary that we've seen. Here's what's behind their downgraded view. They say that, we have seen this kind of steady climb higher, the steady melt up in Apple shares is what they cite over the past few months. And they said that's been happening despite this, quote, steady drumbeat of bad news. This is the news they referenced, that federal judge saying that the payments that Google makes to Apple every year for a default search position, that being seen as illegal, that's difficult for the stock to be where it is. Their position in China, they've talked about the weakening there, which we've seen some commentary about that and how Apple has had to do some discounting to move devices there. So they highlighted that as a headwind for Apple. The Vision Pro, we haven't talked about that in a while, and they called that disappointing, essentially, in terms of the reception for that. Look, that is a pricey device, but again, they flagged that as something concerning when it comes to the valuation that we've seen with Apple. Another headwind for them, even though they say that they see that Apple not suffering under the looming tariffs from the Trump administration. And when the Trump administration did this the first time, Trump 1.0, Apple did not suffer under those tariffs there. So they see them being exempted. But if there is that tit for tat that we saw before in Trump 2.0 regime, they believe that Apple would suffer in a retaliatory situation. In other words, if we impose these tariffs here, China comes back with tariffs, they see that Apple would have difficulty. And then the other thing they talked about is that less than jubilant response to this new AI suite that Apple talked about. And, we were supposed to see this super cycle with regard to an increasing consumer base adopting new devices and because of Apple Intelligence. But they said, look, that hasn't been the case. And they decided that the outlook for Apple is challenging and, quote, decidedly unattractive. But when you look at the larger analyst community, more analysts than not are bullish on Apple, Oliver.
Yeah. All right. As far as sell ratings go, I think the more it depends on policy and Trump, then the less I'm concerned about it, frankly, because those are things that still are very speculative. We don't know what's going to happen. And even if they do, I'm a bit of like a truther when it comes to the just cyclical kind of wave and tide of the economy that any 4-year cycle or one man, no matter how much power he may have, that is a tough tide to swim against. Just look at the way. Not to go too off tangent here, but the pandemic hit basically in the last year of one presidency. We flushed the market with all this money, and then when all that money basically started having an effect, inflation took off in the next guy's term, and that guy got yanked. So it's like the power of the things we can't control. I'm more interested in their comment about like the AI stuff for the product maybe not taking off. To me, that's leagues more important.
Yeah, that's a fair point. It does feel like, in general, when you look at the broader market action, it feels like investors are trying to read the tea leaves about the incoming administration, who will be the winners and losers here. But I think you make great points about what are the individual stories around Apple, and then to play the other side of the equation, devil's advocate, if you will, in terms of the bullish commentary around Apple and the analyst views around that. They have a sticky customer base. I mean, they have more than 1 billion users, so it's hard to get out of the ecosystem once you're in the Apple ecosystem. One, and then the services growth, that has been key. So even if there are, for instance, this institution of tariffs and that potential tit for tat and potentially being difficult for Apple, they've been growing their services sector. Obviously, the iPhone is their crown jewel, so there's a lot relying on that. And then you go back to even some recent commentary. For instance, our friend of show Dan Ives from Wedbush with the prediction that Apple's market cap could reach $4 trillion by this year. So it looks like in terms of the reaction in early trade right now, stock is under a little bit of pressure, but not much off the back of this.
Okay, fair points, I guess, that they're making, but I just don't see the market freaking out on that type of thing. But that being said, this is the time of year often when Apple narratives start to get pushback and Apple narratives start to turn a little bit more negative. And I feel that there is some of that in the last couple of weeks that you're hearing a little bit, because Apple had the kind of negative narrative last week and now this too. And by the way, I don't think anybody even needs to make all these elaborate cases. All you have to do is say Apple trades at 33 times, the most expensive it ever has, on probably the most speculative stuff ever. So it could go down just for that alone.
That's fair, exactly. I mean, the valuation there has gotten stretched when it comes to Apple, so that's a point that was not made that I saw in this note. Well, to be fair, they make it to a certain degree saying, in terms of where their price target is, based on the headwinds that they see, but not a declarative statement that I saw with regard to the valuation.
Yeah. All right. Good stuff. Good comprehensive look at that. Appreciate that perspective. All right. We'll see if the market buys it. But just to lead with policy and stuff, I feel like, I've heard worse short cases out there. How about the one for Tesla from Bank of America? I mean, this one's kind of like somewhat similar, right? Well, I mean, not similar, but their price target's going up. So this one's even less bearish of a bear note.
I think this is like a kind of a couch view now on Tesla. And look, we know when it comes to Tesla, you either have those who love it or those who love to hate it. This one is a little more in the middle. Bank of America downgrading it to neutral from a buy. They did increase their price target, though. Their new price target is $490 a share. One of the things
what a
in
downgrade.
terms of downgrading, right?
It's at $400. It's at their old price target. Like, what is this?
Yes. Look, it is. I mean, the downgrade itself is hitting the stock. The stock is off. I mean, it's trimming how far it's off. It's off less than 1% now. But they highlighted the execution risk around FSD. They said it's high, and business execution risk is high. They said they still have to make the case for executing this better than humans. And this is a little bit of a different story, but I don't know if you saw this video going around about the Waymo vehicle that there was a passenger in, and it was circling the airport, and they had no control over the situation. They were trying to, they can't get out of a moving vehicle. They had to call into customer service. So to the point about, FSD, their view now is Tesla has to show that the missteps that we see every now and then in these instances that pop up where they don't operate well or there's a failure, it has to be better than us when we're driving.
Okay, yeah, that's true, yeah. Again, when I took the Waymo, the first trip, I'm always going to be able to tell this story. The first trip I ever took on Waymo, the thing avoided a very clear, fender bender. Somebody was going to pull out. And I was like, swear pretty hard to live. I got it on camera, and it was amazing. So, but yeah, I'm like, okay, it's just hard for me to look at their subject matter in the note and then go, well, they raised the price target up to $80 above where it trades. So.
Yeah, and I mean, keep in mind, yesterday you had more bullish analysts around Tesla. You had Stifel, you had New Street upgrading their view on Tesla. New Street had boosted their view to a buy. They have a new price target of $460 a share. And they talked about, their view is more about the reacceleration of growth when it comes to Tesla because of the lower cost of vehicles, pricing, stability, and margins stabilizing is what their view. Stifel had raised their price target to $492 a share. They see actually progress with regard to FSD, so they have obviously the more bullish outlook. And obviously, we're going to continue to hear about FSD, autonomous driving, and just a quick, slight tangent here. One of the stocks I found really interesting this morning in terms of movement was Uber, and that's about its relationship that they announced with NVIDIA and supporting their autonomous driving vehicle plan. So you're seeing shares of Uber move higher off the back of that.
All right.
Slight pivot there.
All right. Uber, nice little multi-day bounce there for Uber. I tweeted this is the dumbest note I've seen, but I changed it. I changed it to silly because I don't want to get in trouble. But it's pretty, it's pretty silly because here's the difference though that I can't appreciate is like long-term versus short-term. But I feel that, and maybe the analyst is indeed writing it to like a more institutional, longer-term thinking audience, and in their mind, 400 to 490. I mean, I don't know, still, it's like a 25% move almost. So, like, I don't know who's not happy with that over a 12-month time frame. And that really is like the question that probably almost all short-term traders are thinking is just, does it go back to highs or not? I mean, that's what everybody wants to know. We're in this massive melt-up. And for a lot of people, that's the foremost question on their mind is, can this stock go back to that high it was just at with all this kind of presidential premium pumped into it and stuff? So to say that it can, which this note does, is like, it's hard for me to be negative on it.
And to be fair, the stock just flipped positive.
There you go.
It's exactly. So, even their view, as we talked about at the top of this, is couched because, while they've downgraded it to a neutral, they've had to increase that price target. They said that the catalysts around the growth drivers around Tesla, they see as, baked in, but clearly not baked into the price since they've had to raise their price target.
Yeah. All right. Hey, let's talk a maybe realer one. Lulu with an upgrade to outperform. So when a stock has been as troubled as Lulu was, but now in a multi-month comeback, this is interesting. Up 4%.
It is interesting, yeah, and it's been steadily climbing since the open. It started out higher by 2%, so it's since doubled its advance. Bernstein has boosted their rating on Lululemon to outperform from market perform. Their new price target is $460 a share. They see several drivers here. They're upbeat on the sportswear. They expect Lululemon to see an increase in America's growth because of the strength of the higher income consumer and also easier comps. Obviously, they could have easier comps when you say kind of look at year over year with that difficult 2024. They think that the squeeze that happened with regard to middle and higher income consumers and the trade down, they think that's basically done. And consumers essentially more optimistic about discretionary spending this year. So they see Lululemon being a beneficiary of that. And you've seen increasing views on Lululemon and their trajectory. One of those is, because the Americas had been difficult recently, and you'd seen more growth internationally, and even menswear had been stronger. But now it looks like analysts are saying, okay, it looks like the worst is behind Lululemon.
Wow. I mean, I believe it. I've always thought that the selling was getting a little bit intense, but and the narrative was getting a little bit displaced. You're still very hard pressed to find anything on discount there. That being said, thanks, my brother and sister-in-law. They got me some Viore for Christmas, and it's nice. It's very nice.
Ooh, me.
But I go to Lulu for the nice stuff. I actually go to Lulu now. That's like my go-to if I need, some slacks or dress pants, or I even got my New Year's. I needed some black pants. Boom, Lulu.
I mean, that's one of their growth areas.
Yeah.
It's been menswear.
Yeah, no, it's great.
And,
They've totally replaced like all the other basics, I mean, it's good stuff.
Yeah, I mean, look, that has been, the product diversification because they weren't strong once upon a time in menswear, but over the years they've increased their footprint in that space, and that helps, especially when you see the downtrend. It's when they have competition from Alo, et cetera. So they've had to shore up in other areas, but now it looks like, especially in terms of both their product base, that they're, having a stronger base. The consumers are coming back to Lululemon, and now the analyst is analyst community is returning to Lululemon, as you start to see not just today's note, but more and more analysts are increasing their views on and becoming more constructive on the stock.
Yeah, fascinating. I think they're going to have to do a lot of rebranding, though. It's going to be a little bit of hard work. I don't think people really associate it with some of that stuff for men yet. And the athleisure part has definitely gotten eaten into. That's no question for sure. I mean, that definitely has a ton of competition. But if they can get the word out on some of the other stuff, I've worn their shoes too, and they're actually not bad. So that's been a big failure for them, but they're actually not bad.
Watch out, Hoka.
Yeah, exactly. All right. Appreciate good stuff, Diane.